Bitcoin is slowly becoming kind of the inverse market, where when stocks get a little bit scary, people do start to inch over a little bit towards the cryptocurrency side of Bitcoin. Everyone's assuming the BlackRock ETF and the ETF, the spot ETFs, will get approved, which eventually I do agree with. So I think that this is where it's kind of this in-between period where it's kind of a digital gold, but it's kind of still a risk asset. And I say kind of still a risk asset because if you look at today, Bitcoin's down and we see the stock market down, right? So we see that correlation still holding. But then if you look at the bigger time frame, Bitcoin's been grinding up while the stock market's been a little bit more fearful and panicky. So I think there's this in-between period. Initially, Bitcoin was 100% a risk asset. Slowly over time, and this will take years, Bitcoin will slowly move into more of a safety play versus kind of we're with a digital gold or with gold. And I think we're seeing that in real time happening. It just takes a really long time. So again, I'm still in the camp that we could still see a big dump out on Bitcoins going forward. I'm worried that there's a head and shoulders pattern starting to develop here. We'll have to watch that very carefully over the next month or so. But if we break this 25,000 low here, we're going to go to 20. If 20 breaks, we're testing the lows on Bitcoin again. And I do worry that if panic really hits the market, this selling becomes indiscriminate, and that's where you could see Bitcoin dump out. By the way, long-term, huge advocate of Bitcoin. I love it. I just do think that going through this next tumultuous period in the financial system could be very troublesome early on for Bitcoin. Long-term, the less supply, the better. We know that. The reason I'm not super bullish because of it just alone and saying going into it is because historically a lot of the moves have come after that period. So people are kind of banking on making a lot of money. And the other thing too is what's very concerning to me is that if you go online and you talk to people, they're like, oh, well, just buy it now and close your eyes and come back at the halvening and you'll be a millionaire. And I had trades like that in my early career, and every one of them I lost. It was like, as soon as you think it's a done deal and it's a no-brainer, you're losing. You're going to lose money on that. So I still think longer term, absolutely, it drives price higher. I'm just skeptical that it's going to overpower fear and greed, and in this case, fear.
Grayscale is gearing up to convert its Grayscale Bitcoin Trust, GBTC, into an ETF following the SEC's missed deadline. The substantial reduction in the discount on GBT shares versus its net asset value, NAV, from 48% to 16% reflects increasing demand. Arbitrage traders are entering the scene, shorting spot BTC against GBTC longs as the discount narrows. This comes as the SEC decided not to appeal the court's approval of Grayscale's conversion. The next critical approval deadline for the SEC is looming on January 10, involving applications from other big players like ARK Invest and 21 Shares. A surprising revelation from the Wall Street Journal uncovers that the U.S. government has amassed an astounding $5 billion in Bitcoin. This stockpile is the result of the government's aggressive stance against cybercrime and the dark web. Operations like the Bitfinex cyber attack intervention and the Silk Road takedown significantly contributed to this massive hoard. Following confiscations, a meticulous legal process unfolds, sometimes taking years. The U.S. Marshals Service manages the liquidation, often through auctions. This government-held Bitcoin treasure trove is a testament to its ongoing efforts to combat online illicit activities. Bitcoin recently found support near $26,550 and is now attempting an upward correction. It broke a major bearish trend line, is trading above $27,000, and faces strong resistance around $27,300 and $27,500. While it's showing signs of recovery, a substantial breakthrough above $27,500 could pave the way for further gains, targeting $28,000 and potentially $28,500. However, a failure to breach $27,500 might lead to another drop, with key support at $26,900 and $26,550. Bitcoin's immediate future is perched on this crucial price threshold. Let's continue our discussion with Gareth.
Believe it or not, it wasn't the greatest of jobs numbers. And I know the headline number made everyone say, wow, that's an amazing growth of jobs, 336,000. But if you actually go under the belly of it, it's kind of like looking at a car and saying, wow, that's a great car. And then you look under the hood and you're like, oh, this is a lemon. The same thing with this jobs report. And what I mean by that is that full-time workers actually declined while part-time had a major gain. And in fact, if you look at the last 3 months, full-time jobs gains are actually a loss. It's down about 600 and change thousand in full-time work. And what does that tell us, right? So it tells us that the underlying economy is starting to weaken more part-time work is being taken on because they can't find full-time jobs. Then throw into that President Biden, I believe, had a press conference around 11 a.m. on Friday when the jobs number came out. And he actually said, expect to see weakness in the jobs market. So he's basically telling you what is coming. The numbers in the underbelly confirm that. And we saw the yields after initially popping on that jobs report, and the dollar as well. We saw the yields coming back in and the dollar actually turning negative. So the market loves a lower yield and a lower dollar. I think at least from a government point of view, it becomes very political, and where, you don't want this to surprise people, and all of a sudden going into next year's elections, the unemployment rate starts to spike and people are losing their jobs. So what he's trying to do is he's saying, hey, listen, it's been a great run, but guys, we have to prepare. There's going to be a slowdown here. And he's doing that to kind of cushion the actual event so people aren't shocked when it actually comes. But it's coming, folks. I mean, it is coming. The fact that Jerome Powell, a couple months ago said he didn't see a recession, that's like the kiss of death right there. You definitely have a situation where Ben Bernanke did that in 2008, and look at what happened in 2008 and 2009. But again, the data out there is showing us that the economy is absolutely slowing. A trend line that goes back to 2012 here, and it's really a beauty. And what we could see is every time we hit this line, there's a pullback, right? Pullback. Well, look at what we just did. We just pierced the line, and the yields are beginning to pull back as well. And so what this tells me is the bond market, even in spite of a strong jobs number where everyone was saying, wow, this is so strong, the bond market is actually sniffing it out and beginning to see a decline here in yields. And that, again, is a heads up.
Okay. The bond market, is that sniffing out an economic, actually, I was looking at this the other day, I had this discussion with somebody else. Is the bond market, in fact, just what you're looking at, sniffing out an economic recovery? Now, in the past, sometimes when you see a big sell-off in treasuries and a big spike in yields like we've seen in the last couple of months, does that signal to you that the bond market thinks that things are going to get better?
Well, so I mean, for bonds themselves, right? Bonds have been cut. I mean, this is the other crazy thing. These banks out there, right? You're talking about all these banks, these regional banks. They have billions, hundreds of billions of dollars of these bonds on their balance sheets that are not marked to market. So they can keep them on there. But we have to remember that a lot of these bonds are down 25 to 50%. So I think I would expect bonds to rally as yields pull back. But I think the pullback in yields that we're seeing here on the chart is clearly telling us that the bond market is anticipating an economic slowdown, which would then kind of cap interest rates and maybe even start to bring them in just a little bit.
Berkshire Hathaway's Charlie Munger says most crypto is going to zero, while a Jefferies analyst says Bitcoin is actually set to thrive in the case of a dollar collapse. Meanwhile, American economist Jeffrey Sachs says central bank digital currencies, CBDCs, are the real money of the near future. Get caught up on all this, as well as the latest updates from the Sam Bankman-Fried trial just below in the Bitcoin.com Newsweek in Review. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.